Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at two trending tech stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two tech stocks that have been trending on Wall Street, picking up dozens of analyst ratings in just the last few days, and coming in with a strong buy consensus. So we're going to take a look at these two companies, what it is that they do, and what has them buzzing on Wall Street lately. We found these stocks under the Tip Ranks Trending Stocks page. Found underneath the Research Tools menu, here you'll find a collection of companies with recent ratings from analysts. We looked at the best rated in the last 72 hours, focusing in on the tech sector to get our list of companies down below. You can check out the trending stock page for yourself over on the Tip Ranks website or right on the Tip Ranks mobile app, which you can download using the links in the description below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into our two trending tech stocks. First up today, we're taking a look at ServiceNow. They trade under the ticker NOW or NOW, currently priced at $975 per share. The stock is up 20% in this past year, over 6% in the last 3 months, and you can see a jump up here earlier this week. ServiceNow provides enterprise cloud computing solutions. They provide digital workflows to automate and manage business processes, used by organizations to streamline operations, enhance productivity, and improve employee and customer experiences. Essentially, ServiceNow helps businesses digitize and automate various tasks, making them more efficient and responsive. ServiceNow is trending on Wall Street after delivering a stellar quarterly report on July 22nd, outperforming all key metrics. Earnings per share of $4.09 beat by 52 cents per share, while revenue surged 22% year over year, coming in at $3.22 billion. They saw robust growth in new customer engagements and continued success with their AI products. The company also had significant deal activity with 89 deals greater than $1 million in net new ACV. And they also just announced a big deal with Alphabet. Alphabet's cloud unit won a deal worth more than $1 billion to provide cloud computing services to ServiceNow. Following all of this positive news, we have tons of Wall Street analysts reiterating their buy ratings, many of them increasing their price targets as well. An analyst from D.A. Davidson highlighted ServiceNow as a market-leading AI innovator and share gainer in CRM. Another analyst at Stifel said that management remains focused on operational discipline and is beginning to see sustained results from leverage to Gen AI solutions, which they expect to persist for many years to come. ServiceNow has 32 overall analyst ratings, with 28 of those coming in just the last 72 hours, and the stock does come in as a strong buy. With 28 buys, 3 holds, and 1 sell, the average price target of $1,150 implies an upside potential of 18%. Looking at those price targets down below, you can see a bunch of those analysts boosting their price targets, and they range from an upside of 15% up to 28%. And for our second trending tech stock, we're taking a look at NXP Semiconductors. They trade under the ticker NXPI, currently priced at $221. They are in the red overall this past year, down 11%. They've gained 14% in the last 3 months, and in the last week, they're actually down 3.5%. NXP is a global semiconductor company headquartered in the Netherlands. They design and manufacture semiconductor solutions for a variety of industries. They are a major player in the automotive industry, providing solutions for autonomous driving, vehicle connectivity, and electrification, and their technology is also used in industrial applications for automation, machine learning, and building automation. Essentially, their technology helps devices become more intelligent and connected, improving people's lives across different sectors. They shared their latest quarterly report a few days ago, and as you saw on the chart, the stock has slipped a bit. Revenue did decline year over year, but came in ahead of expectations, as did their earnings. Earnings per share of $2.72 beat estimates by 4 cents per share, while revenue came in at $2.93 billion. That did decrease 6% year over year, but beat expectations by $30 million. They also saw a significant growth in free cash flow, and they also provided guidance for the third quarter, reflecting a positive outlook driven by emerging cyclical improvements and company-specific growth drivers. They project Q3 revenue to be $3.15 billion, which would represent an 8% sequential increase but a 3% year-over-year decrease. They also just announced a deal for a $900 million acquisition of their MEMS sensor business. ST Microelectronics will be acquiring the portfolio that primarily targets automotive safety sensors, both passive and active. Despite NXP stock dipping following that earnings report, we still have quite a few analysts that are increasing their price targets. One analyst from Argus increased their price target to $270, saying that the company guided above estimates, but the stock traded lower on tariff and macroeconomic concerns. Another analyst from Truist said that the results and guidance show a more certain, but still modest, cyclical upturn, and that NXP has managed cyclical dynamics quite a bit better than peers, but trades at a discount. The stock is rated a strong buy with 24 current analyst ratings and 18 of those coming in the last 72 hours. The average price target is $254 for an upside potential of over 14%, and that breaks down to 20 buy ratings and 4 holds. Looking at those recent price targets down below, they range from an upside of 8% all the way up to 30%. So that is a quick look at 2 tech stocks trending with Wall Street analysts this week. Let me know your thoughts on these companies, and if you agree with these analysts or not. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. Have a great weekend, and I'll see you back here next time.